This is the future architecture of private equity, the strategy, systems, global capital, and building a firm that wins. Now, private equity changing faster than is changing faster than at any point in its history. The firms that win the next 20 years or the next 2 decades won't be the ones with the biggest funds. They will be the ones with the strongest systems, the clearest strategy, the deepest operator networks, and as well as the most global perspective. Now, the goal today is to break down the future architecture of private equity across three dimensions: that is strategy and systems, which is how top firms think; global and macro forces, that is how capital will move, I beg your pardon. Building a private equity firm as well, that is how to construct a platform that lasts. Now, this is the blueprint for the next era of private equity. Now, starting with strategy and systems. Private equity is not just an asset class, it is a system of power. Private equity shapes industries, labor markets, supply chains, innovation cycles, as well as national competitiveness. The firms that win understand that private equity is not about buying companies. It is about controlling the systems that create value. Now, the next 2 decades will be defined by five forces. That is AI driven deal making, operator led value creation, permanent capital vehicles, globalization of deal flow, as well as mission driven investing. Now, the firms that master these forces will dominate the next era. With with this, you have to understand that moats in private equity are not built with capital. They are built with proprietary data, operator networks, industry specialization, brand trust, um, differentiated sourcing systems, as well as long-term capital structures. A private equity mode is a repeatable advantage that compounds over time. Now to the global and macro perspectives. Now, private equity allocates capital at scale, and capital allocation is economic destiny. Private equity influences productivity, consolidation, innovation, infrastructure, as well as job creation. And let's not forget global competitiveness again. Countries with strong private equity systems grow faster and adapt quicker. Now, sovereign wealth funds, SWF, are becoming the new super limited partners. They want long term returns, strategic influence, national resilience, exposure to innovation. Sovereign wealth funds will reshape global private equity flow for decades. The next wave of private equity growth will come from India, Southeast Asia, Africa, Latin America as well. These markets have rising middle classes, infrastructure gaps, digital adoption, as well as young population, which is very important. Now, this is where the next generation of private equity giants will be built. You must also understand that crises don't destroy or do not destroy opportunity, they reveal it. Private equity thrives in dislocation, volatility, restructuring, distressed cycles. The firms that the firms that understand macro cycles will outperform those that ignore them. Now to building a private equity firm. Now, a private equity firm is built on four pillars, like I keep saying. Very importantly, one, a thesis, two, a sourcing system, an operating network, and a capital base. If you can build these four, you can build a firm. Limited partners don't invest in firms, they invest in clarity, repeatability, alignment, credibility, as well as a differentiated angle. Your thesis is your currency. And here I will chip this in. That is the operator led private equity model. The future of private equity is operator led. Operators bring credibility, they bring speed, they bring insight, execution. So much so that evidently the best private equity firms will look more like elite operating companies than financial institutions. Now, brand is also the new deal flow engine. A strong brand attracts founders, operators, limited partners, talent. Brand is not just marketing. Brand is clarity plus consistency plus credibility. And I'll also chip this as well. I'll chip this in as well. That is the HoldCo versus fund. Which one wins? Now, HoldCos or holding companies are rising because they they compound longer. They avoid forced exit. They attract operators. They align incentives. Funds in the other way, other case, when you need scale, you need diversification, you need institutional capital. The future is hybrid, permanent capital plus flexible structures. And not to make this session too long, I'll end by saying the next era of private equity belongs to the firms that think in systems, operate globally, globally, which is very important, and build platforms, not portfolios. If you understand strategy, macro forces, and firm building, you won't just survive the next 2 decades or 20 years of private equity. You will shape them. I will keep this short, and thank you so much for joining in.